Welcoming everyone to this India market review. Doing this on the evening of Friday, 7th July 2017. We have another day when the market or the Nifty in India went to 9,700 and was not able to cross that. And the question that we want to ask today and look at the broader aspects of this is 9,700 a triple top? At least in the short term, if not in the, definitely not in the long term. It's way too early to say, that's for sure. But is 9,700 a triple top in the short term, or is it something that we can expect the market to break through and break out of in the coming weeks? And then who knows, we see higher levels and maybe even 10,000 on the Nifty coming. 2 weeks back, if you had attended the IMR, we had clearly looked at 9,700 being a double top at that time and had mentioned that the bias was probably more bearish than bullish, and well, always happy when the view sort of uh, you know becomes real, and that's exactly what the market did for a week, and then again it started to attempt to claw back up this week, but has not been able to make cross 9,700. We also talked about, 2 weeks back when we did the IMR and we talked about uh, the Nifty stocks, we were mostly bearish. And then last week when we talked about the Nifty Next stocks, the mid-cap side, there was a mixed bag there with some very strong bullish stocks and some very strong bearish stocks. So in today's IMR, the first part, we are going to look at, as usual, the global markets, and then look at the sectoral indices on the Indian market and review this and basically try and answer this question one way or the other, hopefully. Otherwise, of course, that's not always possible. Clarity of that level doesn't happen all the time. Whether 9,700 is a short-term top or is that just a temporary resistance, is 10,000 maybe coming. That will be in part one of the IMR, and then in part two, we will we're doing something very different. We'll be looking at the Nifty 50 stocks and continue where we left off 2 weeks back and look at what the state of the Nifty 50 stocks is, right? So that's how it is going to be. All right, so without further ado, let's look at the global markets and see where they are. Where the global markets are is we have the Dow Jones index, as you can see here, and one second. 6th, right? So yes, updated till yesterday, and what's on the Dow Jones is, like we've been saying, resistance at 21,500. This 21,500 is clearly a top now. It's not really being able to break out of that zone at all, and well, looks like the US markets for the short term have definitely topped out. Even on the weekly chart, there is you know, sort of triple red candle, but clearly the volumes have come down. So there is still some chance that 21,500 could get broken out as far as the breakout is concerned. So anyhow, let's wait and watch. It's not like there's a primary top there in my opinion, but definitely that's one thing in the US markets that we have to be aware of. Looking at the broader US market on the S&P 500, that's also very much the same, as you can see. As a matter of fact, a little more bearish on that than the Jones, clearly. So that's for now not a very healthy sign, but again, volumes have clearly come down on the S&P also. Okay, but the bearishness is nevertheless there. Looking at Europe, looking at Germany, and that's clearly turned down. So there was some bullishness across Europe after the French election and Macron won, but after that clearly that has not been able to sustain, and we've seen this now come to this previous top. And it's my view that I think it'll probably break this support and perhaps go lower, right? So that's DAX. And we look at FTSE, that's also clearly come down, and mentioned this last week's IMR about this uptrend and this support line. Now it's at a very, not a very, but definitely a critical juncture, as you can see. So we're talking about an uptrend which has been there since December last year, which is perhaps under threat at this point. Can't be sure at all. Notice how in mid-April it just cracked, took support, and then really went back up. What happens here at this point, we'll have to wait and watch. And probably the global markets, looking at the G20 summit and what may or may not come out of it. CAC France, that's also very much in line with the rest of the European indices, so really nothing much to say, except that at least in this case the CAC France French index is definitely more bearish than the rest of the European indices. There's definitely a breakdown here, and lower levels in France are quite likely to happen, I would think. Even on the indicator side, not a lot of strength actually there at all. So we have that just for the sake of completion. And looking at Japan, so we had talked about this rising wedge, you'll remember, in the Nikkei, and that, well, seems to have broken, but again not yet decisively, and we'll have to see again what happens there. What is clearly an issue here is the thing that we have a sort of wait and watch, I think pause mode, 20,000 on the index, psychological mark, G20 going on, and as far as Japan especially, more than any of the other indices here, the North Korean problem. If there is something that breaks out in North Korea, and there is one missile that lands in Japan, I think it would definitely trigger off a fall in the Japanese index, and then we'll have to see how that pans out. So sort of geopolitical issues, financial issues, technical issues, all simultaneously at play in the market is what it looks like, and we'll just have to wait and see how this pans out. But overall, the global view is bearish, or at the very least, I can very confidently say that the global view is not bullish. That is for sure. Whether it will break the respective levels and break down and go lower, that I think there's still some more evidence required. But I think overall, I would be biased towards a downside move rather than an upside move. But we have been surprised before, so let's all keep an open mind and not prejudge what the outcomes could be. And what we have here on the Nifty is a triple top on the Nifty. Let me actually just use a plain chart here, right, very clearly. So I don't think there's, so that's one top there. Let me just make it a thin line. Right, so that's a top there. The high there is 9709. The high here is 9698, and the high yesterday, Thursday, was 9700. So clearly this is some place where the market is right now trying to figure out what it should do at that level. Until All right, so let's actually leave that. One second. Yep. All right. Now, when I look at this, and then I, put the volume. Interesting that. Sorry. So we've got this dip, and then you saw this. Look at this big volume increase when it has fallen, and then the volume has not really fallen when the market has gone up here, right? So if the volume had fallen in this place when the market had gone up, I would have been a little more convinced that there's a top in place. But we are seeing volumes as the market has gone up. Not outstanding volumes, not brilliant volumes, but at least average volumes. Generally, if you're looking at an impending fall, even on that last leg of the rise, on the last leg of the rise, or like somewhere close towards the end of that rise, you will see some distinctly lower volumes, which we are not seeing in this case, in my opinion, right? So some hope that a move out upwards could be possible, but that's not guaranteed. Indicators is no strength at this point. At best, indicators are neutral. If there is one thing to consider, then watch this. All right, so this is a daily chart. So daily chart, IFI 9,700 for now clearly seems to be a pausing point, but overall the trend is still very, very much up. There's no doubt about that. The long-term moving averages, the long-term trend, multi-month, multi-year, the trend is distinctly up. So which brings me to looking at and visualizing the long term. So if I put this in weekly, then what you see in the weekly chart is, well, 3 weeks of a small, correction. The weekly candles are really not that big. They are like, they're not small either, but they're definitely not, it's not like the bulls really beat the market down significantly. And then we've got this bullish candle this week, and it's there. It's a weekly candle which is of, how shall I say, decent proportions, and not a weak doji or a shooting star or anything like that. And then if I look at the monthly chart, which I rarely do on the Nifty, because as a trader I don't really have those sort of multi-month positions, it's also quite clear that if I just move this up, then you will see that we had 1 month of bearishness in June, and after having 1, 2, 3, 4, 5 bullish months, very well deserved 1 month break. And then it's quite possible that this is another month where July, this is only the first week of July, remember this, way too early to say whether this will be a bullish month or a bearish month net. But nevertheless, there's no threat to this long-term trend at all. So if you're looking at the very long-term trend, really no threat at all. There is, if you notice in the previous corrections, there was this big red candle here. This was the 2008 January candle. There was this candle here, which was the, again, January candle of 2011. And then we had, more recently, we had this candle here, which was the March candle of 2015. And what I'm inviting you to notice is the size of those red candles and how they were much bigger than the red candle that we had in June. So there's no evidence right now that the bears have strongly taken over the long-term trend. But in the short term, yes, there is definitely some concern. So this is very important to have in mind when you're trading and investing. How the short term, medium term, and long term interact with each other, and they, something will show bullishness, something will show bearishness, and then you have to decide how really this is relevant to you. So how I would interpret this practically is that for short-term traders, I would probably think it's better to wait and watch on the Nifty at least. Let it decide whether to break 9700 or not. And if one has, or whenever there's a more decisive, what shall I say, price action on the chart, which clearly shows that the market has decided to be either bullish or bearish and then jump in. On the other hand, for the aggressive traders, this is a nice setup to do long straddle on the 9700 calls. You buy something like the 9700 put and the 9700 call for this month for the July contract, and just sit tight. I think since we've got 3 more weeks to expiry, or is it 4 weeks for July? 1, 2, 3, yeah, 3 weeks more to expiry. I think we should really be able to get some moves in that 3 weeks, and then hopefully one of those legs makes money and makes enough to compensate for the loss on the other leg, right? So a long straddle to 9700 is something that one could look at. For the more adventurous and the more complex folks, then other option strategies are there. You could look at the 9700 straddle and also go short on a strangle, which is short the 10,000 call, short the 9400 or 9500 put, while you're simultaneously long on the 9700 straddle, right? So that's another view you can look at, because I don't know whether it's definitely not going to break to 10,000 on its first attempt. Right? There will be a major celebration, there will be a major review, there will be a major like, wow, we've done something great in the market type thing. There will definitely be profit booking if the market goes up every 100 points, I think. And I don't see in 10,000 being broken up out very strongly or very quickly for that matter. So selling the 10,000 call and should, in my opinion, at this point looks like a low risk thing to do. But when you're writing options, you must be fully conversant with what all can go wrong. If it goes wrong, it can terribly go wrong. So anyhow, either a wait and watch approach or a let's bet money on both sides approach is what you have to decide. For longer term investors, looking at you already holding a portfolio, well, I would think that overall one could still I would still go by what I had mentioned 2 weeks back, which is put trailing stop losses on your individual stock holding positions and let them ride. If the market turns, and it could, then and I think could for more technical levels than anything else right now, then you're ready and your orders are in place to exit, right? All right, so that, or even if you're not putting stop loss orders on your long-term positions, as in what I mean by long-term positions by default is your holdings in the demat account, is that you must at least have alerts if and when the stock or the index goes below a certain level, that you must be aware that that's happening. You review and take a call on what to do with your positions. Some of you are definitely thinking, should you short? Well, technically there's really no reason to short. The shorts in the last few weeks have been pretty short-lived. No pun intended, but yeah, have fun. It went down but came back, went down, comes back, went down, comes back. And that's simply because the bigger trend is basically bullish, right? Okay, so that is the view on the Nifty. We'll now look at the individual sectoral indices and then see how they are stacked up. All right, so let me get them up. Okay. So looking at the Nifty Next, I used to be called the Nifty Junior, still remains the same name, old name on my database, not to be confused. So that's index is now called the Nifty Next 50, and that's clearly been more bearish than the large cap Nifty. There has definitely been more sense of weakness in this one, and On the other hand, however, it really is a mixed bag when we looked at it internally. So I would really, maybe take this with a pinch of salt. But you've got dojis basically yesterday and today. At its previous, close to its previous life high at around 27,000 odd. So again, wait and watch is the mantra, but you look at the weekly and you look at the monthly charts, you can clearly see that there is, this week has been a pretty good bullish week for the index, right? Okay, so that's what we are seeing in the uh, mm, Nifty Next 50. Okay, so here's the thing, right? Again, overall this week has been bullish on the weekly chart, but is showing some amount of bearishness in the last 2 days. So it's a very iffy situation, and some of us get stumped by this. But if you remember the thing that we keep talking about in EQNS and other BIC courses, there's a time when the markets are clearly trending, and there's a time when the markets are not. This is clearly one of those times when the markets are not really in a trend, at least for the last several months, or at least a few months, and it's tough to make a call at that time. So you either become stock specific and look at individual stock opportunities where again you have clear cut bullish or bearish setups, or just stay away from the market. If the chart is like ambiguous, there is no way you can have clarity if the market is self ambiguous. Please don't forget that. So maybe a good time to just take a week off. I don't know, there'll always be opportunities. I think about, at least as far as the indices are concerned, right? But anyhow, let's look at sector indices and see how they are. This is your CNX 500, and that's also sort of, interestingly, the CNX 500 has made a new life high, if you notice, right? So that high is 8481, and the earlier high was this high 8459, right? So about 30 points higher on the CNX 500. So the broader markets perhaps doing quite better, much better, and that's actually something that has been the case for quite a few weeks now, with the broader markets and the mid cap. And this is something we had mentioned in last week's IMR, that there seems to be some sort of a divergence between how the large caps, the mid caps, and perhaps the small caps are behaving. So definitely no longer a market which is overall clear cut and everything, not everything as in the majority is going up or down. This is mostly looks like a market which is going in different directions. So it becomes really, it's become a stock picker, the stock specific market. So it really is a high. So again, to every few months in the market, this sort of a phase will happen. Those of you who have been regular on IMR will know this, or who have been watching the market will know this, that in a time like this, you can't really take a dart and buy any stock. You've got to drill down. If you want to find opportunities, become very, very stock specific or sector specific. Even sector specific actually may not work. It has to become stock specific. And the other times where the overall market is clearly bullish or bearish, then it really doesn't matter, right? Or just stay out. This is the phase of the market when extra work is required, when more attention to studies, analysis, looking at a wider set of stocks. If you are always looking for opportunities, this is the time to invest time, effort, to if you want to make more money. And then there are other times when money is just made because the market is just trending, right? So phases change, and you've got to adapt to how the market phase changes. Coming to the sectoral indices, here's the Bank Nifty, private and public sector banks, and clearly that is not bullish at all, right? So clearly we have a divergence here where and the banks have a decent weight in the Nifty. I'm sure we all know that. So we are really not seeing the bank Nifty be able to what is this? I'm just confirming. Yes, the bank Nifty definitely not able to go back to its life high, while the Nifty has been able to do that. The PSU Bank Index, well, that was cracking, and quite bearish on it. And I would think that I would be still bearish on it, right? Really nothing to write home about. There's nothing of strength in the indicators. Now it is inside that multi-year resistance come support zone from 2012, right? And it just that it came back into it, cracked through it, and then now it's trying to break out of it. Really nothing inspiring for the bulls. It could just have been a technical bounce, or it could right now just be a technical bounce from the 200-day moving average or this long-term support. And I would really not be in a hurry to go long or buy, etc. Right? So the PSU Bank very much there, and then so PSU Bank's really bearish. Overall, the bank Nifty also, showing a lower top now, unless it breaks through that. But even if it does, this high of 24,000 is really something to be really wary of. Then looking at the other indices, the auto index, auto, if you have tracked after post GST, many of the SUVs are much cheaper. The things like the Tata Hexa, the top end is about 2.17 lakh cheaper than it was, but that's also because Tatas, I think, looks like they've cut the price of the Hexa. Perhaps was not doing as well as they had hoped it was. So under the guise of GST correction, they have reduced the price further, more than probably the other automobile dealers. The Hyundai has cut around 5.5 to 6% across all the prices. And Maruti has brought down prices and all. Now, whether this is going to give a flip to demand and more people are going to buy, we'll have to wait and watch. Also, looks like, I don't know, I really haven't been watching TV much of late, but I think from whatever roughly I know, the monsoon has panned out quite decently. So that's another interesting thing, and that generally does good, at least for two-wheeler demand. But the auto index clearly being one sec, where is that? Yeah, if you look at it in the monthly chart, does it still look okay, but in the weekly chart it is starting to look weak, right? But again, really nothing to, no downtrend at this point, but there could really be a top that has been put in place. We'll just have to wait and watch. Again, yesterday and today you're seeing a doji or a very small spinning top. So another index which is not really bullish. Capital goods, so this was in a downtrend right from May. I think the downtrend continues very much. At best it goes up another 100, 150 points, and then it'll probably get beaten down again. And this up move is pretty weak. It's not showing any strength by the bulls. So capital goods, there is definitely weakness in that index. Indicators not showing any strength at all. The FMCG index, so that's really interesting, right? So the FMCG index, gapped up last week and then really, went up, and that was primarily on account of ITC. And if you saw last week, or 3 days back, sorry, there was this decision of the GST Council where taxes on cigarettes and tobacco products have been reduced. So that's another fillip to the FMCG, or rather the ITC. Now, if you actually dive in, not except for ITC, most of the other FMCG companies have really not done too well. So this index, the FMCG index, is driven by one heavyweight right now, and that heavyweight is FMC is ITC. So you have to read this with a little bit of pinch of salt and see how this pans out, right? So this is FMCG. Coming to, so what I'm trying to say is that I wouldn't be too optimistic about this, and even let us assume that FMCG is doing well again, so it becomes sector and stock specific. Right now we've already seen auto be bearish, banks be bearish, and capital goods be bearish. It's very difficult that FMCG is not, it is an important sector, but in terms of weightage, there's no way the up move in FMCG is going to be strong enough to compensate for the down moves in all the rest of the indices we've seen so far, and probably others, and take the major indices up. So there is a, you know, a give and take happening. We could say index management going on, but more often than not, this is likely to not end too well. Okay, healthcare, rather looking at pharma, CNX Pharma or BSC Healthcare. So that's really been bullish this week. Clearly, going up, this uptrend, whether it is the start of a new uptrend, because pharma has actually been on a downtrend for at least 1.5 or even 2 years, or is it just a temporary, reprieve, and this down move continues? Now, why do I say temporary? Because essentially from 2009, this sector has been in a clear uptrend till 2015, and you can see that, sideways correction here somewhere in 11-12, but after that really no correction in the longer term time frame. So this is a welcome correction. I personally don't like any trend that continues and continues and continues, because I start to worry about when is the correction at least going to start, right? So whether it's a fast and a quick downtrend or a persistent uptrend like this, the doubt always happens in persistent trends. When is the correction of the larger trend going to start? Now in this case, it really has started. Lower tops, lower bottoms. Now whether this develops into a downtrend, as in we're getting a strongly bearish market, that I think we really can't say, right? So this is something to think about, but in the longer term, we are still in a downtrend on the healthcare side, but in the short term, healthcare and pharma are definitely bullish. What's there on top are several moving averages and resistance levels that this will have to tackle, but this could be the capitulation move, a big capitulation move. The index went from 15,000 to 13,000. That's a clear 15% fall after already falling from 18,000 to about 15,000, right? So if you look at it from peak to trough here, say 18 to 13, you're talking about a 30% correction approximately, more or less. And that's a pretty decent correction to have. It does not yet qualify. Maybe, I mean, in some places more than 20 or 30% would be a bear market, and if it is, well, okay. Seems to have maybe taken support in support which happened here in late 2014. Okay, that part, late 2014, you had some good support, taken support there, and maybe it is now going up. So this is one index I would not want to short. I think everything else so far that I've seen, I would think about shorting. This is now showing more strength on by the bulls, and no shorting of healthcare. Maybe that's where the long opportunities are. Moving on, coming to IT. Well, the IT downtrend has resumed, and what is of critical importance is that this uptrend from late 2016 is potentially threatened. If that breaks, and then we'll have to see as to how this pans out. In the much larger time frame, we are looking at a clear, complex head and shoulder top, except that the follow through on this is really not as one would have liked. Is this is now, contracting, consolidating, and are we going to see a different move in the next few days or weeks? I think next week we'll know. Does this support line hold, or are we going to see a breakdown of that support line, right? So again, one more index at a iffy area, and IT is definitely one of those. I think it's the next heavyweight after um, banks. So this is also not helping at all. So IT wise, looking bearish or potentially ready for a big down move. If there's some light, it looks like it's on metals because clearly it broke through this 6-month resistance zone, and I would say broke actually quite decisively, broke through the moving averages the week before, broke through the resistance in this week, and not too far from the next resistance, whenever it manages to come there. So on its own, if I had to just independently give my view on this move, I am biased towards saying that this consolidation breakout, and then this is just another pause, doji, and maybe another week of dojis. This is a few days of dojis, and then it guns for the higher level at 12,000 resistance. But if I look at this in the overall Nifty, then with what the Nifty is doing, then there's a bit of concern. But here's something very, very interesting. You look at the weekly chart, and the weekly chart is now showing bullishness, and some, I would say, serious bullishness. So if you look at the weekly chart from 2016 onwards, right, so that is, say, from there, clearly the metal index has been in an uptrend, has now consolidated for about a quarter, and then is the next uptrend going to resume? Well, not that it can't, but given the circumstances of the rest of the sectors, I am little skeptical right now. And what has kept the Nifty up this week, apart from FMCG, is definitely the metal index. Coming to realty, so that's broken out. That's really, really interesting. I think there was no change in the previous RBI policy, if I'm right? So there was no change in the interest rates. There was quite a bit of news written about how the government is probably pressurizing RBI to reduce rates. But, this is a clear breakout. Absolutely clear breakout that has happened here of an ascending triangle. And what can we expect? What we can expect is from 2120 to, say, 1900, 120, 130 points up. That's a clear 5%, 6% up move, another 3-4% from current levels. But one thing is clear, metals clearly, on the weekly chart, we can very clearly see the strong Marubozu green candle. Metals clearly showing bullishness, right? So that is the reality, the metal index, the reality index, and to some extent ITC, FMCG holding the market up. The rest so far are clearly not pulling their weight. As a matter of fact, they're dragging the market down. BSE Power very much on the same wait and watch path as maybe metal was. Now I'm wondering whether this is likely to break out rather than just stay where it is. Even on the weekly chart, 1, 2, 3, 4, 5 weeks of consolidation, and in the very long term, if you have that sort of patience, this really looks like a very strong 2.5 year consolidation that happened in the power space. Nice big fat up move, an extended correction, and then this up move also again happening on strong white or green, in this case Marubozu candles. Clearly, if you see in 2016, the bulls have taken over, and in 2015 the bears were more or less in charge. So in this More likely to, I'm inclined to go with the view that, it's at least going to attempt to come back to 2,400, and then if it does do that, then we will see how our views change. But for now, sitting on support, just capped by resistance, Bollinger Bands, etc. And again, one more like the Nifty index, this another chart rather, this is another very much wait and watch chart. Okay, so power, yes, so I would say looks like 50-50, an even balance of bullish sectors and bearish sectors in the Nifty. Clearly, if you wanted to be long, I think the best one is metals right now. Sorry, realty and metals both, right? Realty more than metals. Metals limited upside. I think realty has perhaps a larger, higher upside that is there. Uh, and then apart from that, all the other indices were iffy to bearish. So what's the view on the Nifty now after having done all the sectoral indices? If I go back to the Nifty, then again, because there's a sort of 50-50 divide within the sectors, tough to predict what will lead what. Of course, there are these online calculators. You can go and see different weightages, as in what are the actual weightages, put your expected price next week, and then take a call, and it'll tell you whether whatever the Nifty or the Sensex level should be, and maybe that is something that will help you decide. But like I said, so coming back, I think I would reiterate the view on the market that it's wait and watch. Short-term bias down, longer-term bias is still up. 9700 long spread is straddle, sorry, 9700 long straddle is perhaps what one should look at. All right, so, and Bank Nifty, the other very commonly traded index, probably not going to go back beyond 2700 in too soon a hurry. I would think maybe for this week and coming week and coming expiry month, it's sideways to down, not bullish. All right, great. So that brings us to the end of the part one of today's IMR. The question triple top, I would say yes, for the short term, looks like it is there, very much there in the short term, not in the long term. And anything that could trigger it to break out of 9700 on a very decisive basis, then I think the market is easily up 100, 200 points just on that impulse and that power and the force behind the breakout, right? So that's what the view is on the Nifty. So I think there's a right now 50-50 chance between 9,500 versus 9,900 to 10,000 on the uh, Nifty in the coming, or in this expiry at least, right? Okay. So trade and invest accordingly. I wouldn't say there are any aggressive shorts at this point in any of the indices, even the bearish sectoral indices, even the sectoral indices which are bearish, they are like there, but the trend could, short-term trend could again turn bullish, right? But if I had a bias, I would now perhaps say that if I had to put a gun to my head, and or not I, but somebody obviously, um, in spite of the 9700 triple top, I would be a little more inclined towards an early breakout, not a very prolonged one. It might still be just a trading opportunity. It may not a investing opportunity, which reminds me we need to do a deep FA review, fundamental analysis review of the sectors. We'll do that in one of the coming weeks soon, right? All right, so time to end the webinar, part one here. For those folks who are interested in part two, I will be sending the link once we close this webinar. So we start afresh with the Nifty 50 stocks in part 2. So great, thank you, and see you on the other side.